This is the Ellis Martin Report.
Join Ellis Martin now for an interview with Richard Carleton, the CEO of the Canadian Securities Exchange, the CSE, at the Mining Investment Event of the North in Quebec City, Quebec, Canada.
Welcome to the Ellis Martin Report in MiningIR. I am sitting here with Richard Carleton. He is the CEO of the Canadian Securities Exchange. We know it as the CSE. And we are at the Mining Investment Event of the North. Richard, great to see you here. Thanks for joining me.
Absolutely, yeah. No, pleasure, Ellis.
Now, you and I have known each other for a considerable amount of time, and I've known your whole crew. And to me, that says you're extremely accessible. You're accessible to us in the media. You're accessible to the issuers. We can literally pick up the phone, email you, call you, and ask you for advice or helping hand or an answer to a question. I've never seen anything like that before.
Well, Ellis, we just celebrated our 20th anniversary as an exchange last week in Toronto, and then an event the week before in Vancouver. And as a disruptor exchange in Canada, it really puts the onus on us to work harder. Every aspect of what we do, whether it's in the trading services, the market information services we offer, and of course what we're talking about today, our relationship with the listed companies in Canada. And so really our mission is to provide services that reduce the cost of capital for companies accessing Canadian public equity capital.
It is quite expensive to go from being a private company to doing an IPO or even an RTO, and there's a lot of requirements that can be overburdening for many issuers. And explain, if you will, because I know that we have people in our audience, whether they're investors or they're thinking of going public, whether they're in the US or any other part of the world. There are reasons to be on the Canadian Securities Exchange. What are some of those reasons?
Well, I think the main reason is to provide a liquidity event which will ideally result in higher valuations for the company, a better asset valuation, and of course a platform to raise additional capital. That's particularly important in the mining exploration space where, as you know, companies are going to typically cash up for a particular season in the field, if you will, and yet with an expectation that the next year they're going to be raising additional funds, providing that the assay reports indicate that the property they're working on is worthy of further exploration. So that public opportunity for investors to participate in the growth of these companies is very important in their ability to raise that capital. Obviously, private equity is very important in some parts of the North American funding ecosystem, but in fact have not been that important a funding source for early stage mining exploration companies, really across the whole set of minerals that people are looking for.
Do you help broaden the relationships that some of these companies have? Do you make introductions to, let's say, investment bankers? I know you can't necessarily officially endorse anyone, right, to that degree, but you know everybody. So what goes on behind the scenes?
Well, we do refer to ourselves in some measure as a concierge for the Canadian equity capital market system. So you're right. I mean, we obviously have a number of important working relationships with the investment banking community, the auditors, the lawyers, and other entrepreneurs that are looking for investment or acquisition opportunities in the market. So with the range of contacts that our team has, we can be of assistance in helping them secure the resources that required, the advice that they need, and frankly at a price point that they can afford. Because again, as you say, companies, particularly in the early stage mining space, are extremely cost sensitive because you're right, it is very expensive to maintain that public listing, and again, to have an effective opportunity to help grow the company, they do need to be very cost conscious at all times.
What kind of vetting process is there before you take on an issuer?
Well, we aim to have very objective rules for the exchange. And again, this is part of the risk reduction exercise that we go through. So most of the time, an issuer will know whether or not they meet the requirement. So the distribution requirements are clear, the minimum amount of working capital, the private work the prior work that's been done on a particular property, as well as the technical documents that are required to support the application, whether it's coming in via an IPO, a non-offering prospectus, or reverse takeover, or fundamental business change, or one of the many ways that companies are able to go public on the Canadian markets. So again, the idea here is that we reduce risk by making it a more predictable process, and that tends to make it faster. So again, with time also representing risk, particularly when the underlying commodity prices for many of these minerals is volatile, it provides, again, a more effective path to the public markets.
You mentioned the time element. I know what I'm seeing lately as a journalist is there's big turnover in what the flavor of the season is. And one moment it's this, the next moment it's that. And if speed is not of the essence, I'm thinking maybe within 90 days or so from A to Z, as an average, then you lose that opportunity. What kinds of trends are we seeing right now? And I would think you would be the first to maybe signal to the investment community, well, this is what's happening now. You should maybe consider this.
Yeah, very much so. People always ask me, what industry sectors are you focusing on? And I tell them, and I kind of disappoint them when I say this, is it really doesn't matter what we focus on, because the investment community is telling us what companies are getting funded, where investor appetite resides, where the best risk-adjusted returns may live in a particular industry segment. So mining has certainly been driving the bus for us and the Canadian markets generally over the last 3 or 4 years. And there was a tremendous investor interest in the so-called battery minerals or energy transition trade, whatever you want to call it. But the lithium, graphite, nickel, cobalt, copper, zinc, and the rare earths were very much in vogue, attracting a lot of investment, a lot of new companies that were set up to explore for those minerals, and typically in what you would call friend-shore or onshore properties that were being explored. What we have seen recently, and I think this is driven largely by the increase in the price of gold and the other precious metal commodities, gold companies are getting funded. So and it is a diminished number at this point. Funding conditions, as we know, are very challenging for companies across the board. But the ones that are coming over the line, by and large, are gold companies with some really interesting properties that, as I say, are receiving funding from the community. The other place that is got a lot of investor interest at the moment is the uranium space.
Really?
And so, again, it appears to be consensus that nuclear-powered electricity generation is going to be part of the portfolio of the decarbonization of energy in energy production in North America. And as a result, uranium, which was deeply unloved for many years, is actually coming back into vogue, and the underlying commodity price is reflective of that increased interest.
So I'm not going to hold you to this prediction I'm going to ask you for, okay? Having listened to what you just said, do you think we're going to see some sort of uranium run or gold run in the equities? We've seen it in the commodities themselves.
Yes.
And with uranium as well. But are we going to, in your opinion, do you believe we will see some sort of run in the fall for precious metals and uranium specifically? You know,
that's a great question, because if we were to talk to all of the CEOs, particularly from the gold companies here, they would immediately tell you that the index of gold exploration companies is basically flat. The commodity price index is way up. And so that gap, which is not normal, that the mean reversion will take place either in the price of the commodity or in the index of the companies. It's more likely, I would say, given the current situation in the world, the geopolitical issues and so on, which we won't get into in any depth, but it's more likely, I think, that we'll see reversion upwards of the asset valuation of the exploration companies, particularly the late stage folks whose proven resources inferred and so on through the technical reports is indicating a commercially viable deposit in the not too distant future. Uranium, I would say the companies there have had a nice appreciation over the last little while. It has supported M&A activity, so a couple of uranium producing companies, relatively small operations at this point, but have been successful in raising additional funds and in doing acquisitions that will increase their production portfolio materially in the near future.
Is the primary growth in the Canadian Athabasca and Saskatchewan, in your opinion, or is it just anywhere in the world where you can find uranium?
Certainly there's a lot of attention in northern Saskatchewan, and that belt extends into northern Manitoba and into the southern Northwest Territories. Says Richard Carleton, noted geologist, which I am not, by the way. But yes, it's very much, and also I should say in the western United States, we're seeing a number of historic properties being revived with new investment, and companies operating out of South Dakota, Montana, Arizona, Nevada, so on, are also coming back to market.
And they're listing on the CSE?
Yes, they are.
Fantastic. So no problem for the sophisticated American investor to buy a stock on the CSE?
Sophisticated or not, in fact, most of our issuers are quoted over the counter in the United States. They trade in US dollars. It's an organized, regulated market. And the companies, and this is deep inside baseball for your listeners, Ellis, but the companies that have opted to have their securities made eligible with the US Clearing and Settlement Agency, it means there's absolutely no friction. So company can have its shares quoted on the OTC markets. US investors can trade on their Robinhood, Webull, Schwab, Ameritrade, any of the discount brokerage accounts, as well as the high service or the full service brokers as well. So again, it's great for the companies because they can raise capital in the United States. They can offer a US dollar market for their investors to further trade from that position. And frankly, that two markets actually provides a little bit of a liquidity boost because there was a lot of cross-border arbitrage between the CSE and the US OTC markets. So I think it's a great opportunity for the issuers themselves to expand their shareholder base, expand their fundraising horizons, and provide an overall better liquidity profile for the investor community.
Well, I'm excited about that. That is very, very good news, especially if you're considering investing and or listing on the CSE as an American citizen or really any other jurisdiction in the world. One final question. I see you almost everywhere I am in the world. You're the CEO of the CSE. Don't you have people for that? Don't you like staying home? Do you like your family?
Well, my family, fortunately, they're all grown up at this point, and okay. My wife has an important career in her own right, and so it's all good. But no, I think we do have a small team, and again, I'm committed and engaged to the success of the organization, obviously, and I really enjoy getting out and meeting with the issuers and the investors. I find it extremely energizing to listen to the entrepreneurial ambitions of so many of these companies, and as I say, I find it really exciting to spend time with them.
Well, thank you for spending time with me. I've been chatting with Richard Carleton. He is the CEO of the Canadian Securities Exchange. We are in Quebec City at the MiningIR. You'll have to edit this. We are in Quebec City at the Mining Investment Event of the North. I'm Ellis Martin for the Ellis Martin Report and MiningIR. Thank you, Richard.
Thank you very much, Ellis. Cheers.
Ellis Martin has been speaking with Richard Carleton, the CEO of the Canadian Securities Exchange, the CSE. Find the CSE at thecse.com. This is Money Talk Radio.
Ellis Martin's handle is @ElMojoMan. Find the Ellis Martin Report everywhere and on the website at ellismartin.com.